Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday, the release of the data in Australia wasn't strong enough to convince the bulls to continue on the rally towards the 80-cent mark. The Australian Bureau of Statistics reported that the building approvals declined by only 1.7% in July, compared to expectations for a 5% drop. Building approvals were revised to 11.7 climb in June, up from previous estimate of 10.9. However, the overnight noise of the bearish price action heightened as the dynamics of a potential bear market phase might be emerging. Yesterday, the Australian dollar depreciated quite considerably and ended by posting a bearish outside range day, which now seals the fate for the market to look towards a target of 78.30-35, but would need to see a break of 78.90 to support further downward sentiment, as well as confirming the bearish outside range day. Any advances on the day sees a cap around 79.45. Today, data release is the private capital expenditure, last at 3%, forecast is lower at 0.2. The overnight price action for the euro dollar now has posted a potential shooting star. With the US dollar increasing against a basket of 6 currencies, the euro has shown significant weakness since this shooting star was posted. The shooting star is a single bearish candlestick pattern that is commonly seen in all markets. The shooting star is similar to the evening star. It is a bearish top reversal pattern that may appear in an uptrend and warns of a possible trend reversal. It actually bears a resemblance to the inverted hammer, although a shooting star won't occur at the end of a downtrend, where you would find the inverted hammer. Instead, the candlestick only occurs after an uptrend. So the shooting star should have a short body followed by a lower shadow. The upper shadow, which conveys the extent of the price movement, must be long, at least twice the length of the real body. This longer body shadow gives the name because when combined with a smaller body and the location after an uptrend, it reveals the shooting star. So from this signal, the euro dollar may have now turned a corner as the US dollar strength increases from the overnight. With the dollar index now posting a firmer close at 92.90 and clearing the resistance of 92.65, the index is looking up towards 93.30 to 40 or even as high as 94.15, which in terms could see the euro fall to a low around 117.90, 95 or 117.30. Any advances looks for a cap around 119.30 to 119.70-75. Well, the dollar yen has recovered rather modestly, considering rebounding from the bullish base at 108.30-35. Along with that, it's broken higher and now looks towards 110.70 or even towards 111.50-55 as a potential target. Support comes in on the day at 109.60-65. The sterling fails to show any significant moves overnight, even though there was a bit of chatter out of the EU, with Chief Executive Jean-Claude Juncker blasted Britain's failure to answer a huge number of questions on its Brexit plans, as negotiators held a new round of talks on Tuesday on a divorce due in less than 2 years. I do expect to see from the technical implications that the fact the market may stage a small impulse to the upside, but should be capped around 129.80-85. And this in terms, I feel the market will test lower towards not at 127.70, but maybe down towards 127.05.15 and reassess from there. The gold outlook is getting a little bit concerning after the bullish enthusiasm recently this week has not been as apparent. With the likelihood that traders are slowly locking in profits if long, the precious metal may find a bit of pressure to the downside after a 10-month peak this week at 1,326. Although seen as safe haven demand initially strengthened earlier after the North Korea fired a missile that flew over North Japan, is the fact that the tension is slightly less after President Donald Trump's reaction to the aggression from North Korea was seen only moderate than seen in the past. However, the president did warn that all options are on the table. A break beneath the trend of 1,295 would give further scope to a target of 1,286, with the immediate support coming in now at 05. So reassess from the break, if we see today at 95, from 86 to 88, and see if the market can rebound, with resistance now seen at 14 and firm above at 18. And to wrap with oil, as you can see here, the market is finding a short-term base around that 45.70. I'm getting a little bit cautious because recent events, traders are currently assessing the economic impact of the tropical storm Harvey, which has resulted in catastrophic flooding in Texas and has knocked out almost nearly a quarter of the US crude oil refining capacity. Now that tells me that if the market is finding supplies getting shorter, then of course the demand for oil or price will increase. So therefore we may be finding a base either from $45.70 or $44.80 and could eventually see the market rally on towards 46 to 47.5, so reassess from there. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a wonderful day that's ahead of us.